Tax. It's that three-letter word that a lot of people dread and yet nobody can ignore. Taxes have been around since ancient times and are a classic example of what we might call a necessary evil. Governments rely on tax revenue to fund spending on projects like infrastructure, education, health, and defense. The taxpayer can be an employee, a corporation, or a consumer, with all having to fork out some kind of expense to the powers that be. While most of us acknowledge that paying taxes is simply a part of life, the complexities and seemingly endless types of tax payments can seem overwhelming. However, it's generally agreed that by paying taxes, we're contributing to the overall improvement and quality of life in our society. And so pay them we do. The payment of some form of taxes can be traced back thousands of years. Written records from ancient civilizations in Egypt, Greece, Rome, and China attest to the governments extracting tax from their citizens for anything ranging from public works to war funding. With coins and systems of money yet to be implemented, these societies took tax payments in whatever forms best suited them. Rather than an income tax, the ancient world opted for taxes on goods being sold and physical possessions. As far back as 5,000 years ago, Egyptian pharaohs took a percentage of grain harvests every year. In Greece and Rome, citizens were taxed on their properties, crops, slaves, and livestock. Although taxation played a relatively minor role in the lives of people in the ancient world, we can see evidence of some payments that are still used today. These include consumption taxes, tariffs, and sales taxes. For example, Julius Caesar introduced a 1% sales tax on goods and products sold throughout the empire. These ancient taxes were generally collected and enforced by civil servants and assigned public officials. Land taxes formed a major source of revenue for governments in the Middle Ages. Citizens paid tax in kind, which was a non-monetary form of tax payment. This might have been for barley, wheat, cattle, sheep, or iron. As societies became monetized, taxes were then paid in coins of silver or gold. Over time, governments began to realize the value of imposing taxes on trade and imported goods. Along with land taxes, these formed the main sources of government revenue. Taxation, however, has always been a sensitive issue. Every government throughout the world has had its taxation policies scrutinized, questioned, and often disputed. Naturally, there's always been opposition to some forms of tax. Taxation feuds have also been the source of many an uprising and even war. A major source of grievance leading to the French Revolution in 1789 was tax. Due to its frequent warmongering and excessive government spending, France has become one of the world's most heavily taxed societies. Commoners took the brunt of the taxes and eventually had enough and overthrew the government. Similarly, in America, the revolution against British rule was largely fueled by anger surrounding unfair taxes. Taxation without representation, and that famous quote, led to American colonists revolting against the British, claiming that it was unfair to be taxed without being represented in the British Parliament. In 1799, Britain introduced what would become the biggest tax revenue provider, income tax. At the time, the British were constantly at war with the French, and the war chests were running low on funds. The then Prime Minister, Pitt the Younger, decided to tax every Briton on their income. This resulted in a 10% levy being imposed on everyone earning an annual income over £60. It was said to be paid in 6 installments, with concessions being given to those who earned less, including children. The income tax was vehemently opposed. However, Pitt persisted, and it has remained ever since. America followed suit when in 1862 President Lincoln introduced a form of income tax just before the Civil War. Income tax was then officially implemented in 1913. President Wilson began levying a 1% tax on all incomes over $3,000. It is estimated that income tax now accounts for around 80% of all the revenue generated by the U.S. federal government every year. The onset of the two world wars since the 20th century saw massive increases in not just the number of taxpayers, but also the rates at which taxes were paid. Or people were taxed, either way. When the U.S. entered World War II in 1942, Americans were encouraged to do their bit and contribute to the war effort. Disney jumped on board and they released a patriotic film with the cry, "Taxes to beat the Axis." These days, most of us are familiar with several common kinds of taxes. Income tax makes up the bulk of most government's revenues, and it's a calculated percentage of income paid in taxes. Payroll tax is another common type in which employers take a cut of an employee's pay and then send that to the government on behalf of the employee. These funds typically go towards Medicare and Social Security programs. Sales tax is another tax that most of us are pretty familiar with. While the rate and structure differ from country to country, consumers basically pay a small tax on goods and services, with a tax often being included in the price. Property taxes affect many of us seeking to invest in and buy real estate, and all the corporations are required to pay varying levels of corporate tax. Most taxpayers in the developed world give payment to different forms of government. For example, federal governments may collect income tax, state or provincial governments may take payroll or sales tax, and the local governments may demand property taxes. Calculating the various tax rates and amounts can be incredibly time-consuming and a very complicated procedure. Politicians spend much of their time in office explaining, justifying, and promoting their taxation policies. Take income tax, for example. In some countries, if someone earns a relatively high income, they aren't necessarily taxed on their entire salary. Instead, they might be simply taxed on the amount that exceeds the so-called average salary. Or then there's sales tax, which is seen as an indirect tax because the consumers pay the tax when they purchase the product. The tax owed is then sent to the government by the seller. Governments will decide the rate of goods to be taxed, with some products requiring extra taxes. These products include tobacco and alcohol, where the consumer will pay several taxes on the item before leaving the store. Because, why not tax the addictive stuff? The accountancy profession is obviously a major beneficiary of taxation. Everyone from multinationals to suburban mums and dads are always on the lookout for efficient number crunchers to help them do their taxes as economically and as legally as possible. Even Albert Einstein was thrown off by the complications of a tax return, claiming that the hardest thing to understand in the world is the income tax. So, with all the taxes flooding into government coffers, it's only fair to ask the big questions. What happens to our hard-earned tax money? Where does it go? While the numbers vary from country to country, most governments try to use their tax revenue for the betterment of the economy and society at large. This means that a significant portion goes to providing healthcare and social security services. As countries around the world experience older and older populations, this particular type of spending is becoming all the more important. The US and a host of Western and Northern European countries spend large amounts of their tax revenue on these services. Education is another vitally important sector to channel tax funds into. Governments across the globe place a high emphasis on providing proper education. From Chile to Canada and from South Korea to Denmark, large chunks of tax funds are put back into developing schools and tertiary institutions. Other important sources of tax-funded government expenditure include infrastructure, such as the construction of roads, railways, and bridges. The more developed countries are able to dig deeper into their pockets and spend more on other quality-of-life enhancing features, such as parks, recreational areas, and leisure facilities. The amount of tax revenue that a government spends on defense varies wildly, depending on the nation, its geography, and its history. As you probably guess, America is the clear leader in this area. Others, such as China, Russia, the UK, and India, also place a high importance on budgeting tax revenue for their militaries. And ideally, the more economically advanced a country becomes, the more efficient its tax system. As more and more people become employees and are required to contribute tax, the government's access to funding becomes increasingly greater. Taxes are accrued from the majority of the population and then redistributed as effectively and as fairly as possible. Which is all well and good, but what about those who are reluctant to pay taxes, or at least the full amount? The temptation to not pay tax or the full amount has been around since the dawn of time. In ancient Rome, severe fines were applied to individuals who shrieked their payments, and in many cases, the tax dodgers were forced into slavery. Chicago gangster Al Capone was one of the most famous tax evaders of all time. He once quipped that they can't collect legal taxes from illegal money before he was ironically imprisoned for tax evasion. While tax evasion is illegal and can bring heavy punishments, tax avoidance is a different ballgame. Tax avoidance is using whatever legal means necessary to reduce the amount of tax that you gotta pay. This has led to some impressively creative and ingenious methods of getting out of tax payments. Simply put, taxes are crucial for a functional government and a society. They're a part of life that most of us accept is for the greater good, even if we do cringe come that time of year when the tax return is due. Unless, of course, you're a tax accountant.